Good afternoon. Welcome to LBMA webinars, or good morning if you are joining us from the United States. We are delighted to welcome you to Digital Gold Part 4. So it's the fourth installment in our Digital Gold series. I'm going to leave the introductions to our host, Sakhila Mirza. Before I do, I'm just going to take you through some housekeeping. It's only a little bit of housekeeping. If you have any questions throughout this webinar, which you may have, please use the question and answer panel at the bottom of your screen. If you can't see the Q&A panel, let us know by sending us an email at ask@lbma.org.uk. If we don't have the chance to answer your questions on the webinar, we will endeavour to get back to you after the webinar. So I hope you enjoy, and Sakhila, when you're ready, please take the floor.
Great. Well, thank you, Taylor, and good morning and good afternoon, everybody. And I just want to sort of re-emphasize what Taylor said. Please keep your questions coming through. I am going to sort of try and I'll ask all those questions. And so please do send them through whenever it comes up. Otherwise, today we are going to be considering the impact of digitization of assets on the real economy. We were just sort of talking about how the word digital and digitization can be quite a mouthful. So you will be hearing the word mentioned quite a few times throughout this webinar. So today's focus is really looking at digital gold as a potential payment tool. Now, for a lot of us, gold is perhaps the oldest form of currency. So using gold as a payment tool is not a new concept. But digital gold, for a lot of us, is new, or at least the technology driving this innovation. So who better than to have our sort of experts join us and actually have this discussion? So I'm going to just introduce our panels and then just launch straight into my questions for them. Starting with Alex, CEO of MoneyGram, who are on a journey of digital transformation, accepting digital gold onto its global money transfer network. Also Brent, chairman at G-Coin, a Goldback token, which is intended to provide the mass market with access to gold. And finally, David, vice president of digital partnerships at MasterCard, who are supporting the view that digital assets are increasingly becoming an important part of the payment world. So with that very brief and quick introduction, let me just launch straight in. So to all our panelists, and perhaps starting with Alex, it'd be great to first of all just hear your opening remarks on where you think this digital world is at the moment, especially when it comes to the digitization of assets, and where do you think it's going?
Yeah, absolutely. Thank you for the opportunity to be here. It's certainly exciting times, and I think an incredibly relevant panel for a variety of reasons. As the world continues to evolve and technology continues to push things forward, digital and digitization of just about every aspect of our lives is increasingly in focus with consumers around the world. And, here at MoneyGram, we have the opportunity to participate in the global economy by really having operations in almost every country in the world. And so for us, we get to see every day the real value and impact and changes that are occurring, whether those are economic or political or otherwise. But certainly for us and for the industry and the world at large, financial services and payments in general have come really into focus in the last several years. And the reason behind that is because there are so many individuals that are focused on improvements and how do we change the view of the world, how do we change financial inclusion, how do we make the world a better, stronger place by providing asset quality to individuals. Certainly security and reliability really are paramount in the lives of individuals. And when you look every day at what's happening in markets around the world, volatility is one of the greatest challenges that individuals face. And certainly in our industry, when you get down to brass tacks, it's really about how do you move money from point A to point B. And I think what's fascinating is that, we deal in fiat currency almost every day in our lives. And I think to a large extent, people take that for granted until you really try to move that cross-border and you get into the complexities of what that really means. And so for us and for the world at large, I think digitization and tokenization of assets really begins to shift that paradigm and gives the opportunity to expand the view of what it really means to participate in financial services around the world. So it's exciting, and I think we're just at the starting point of what's going to be an incredibly interesting and ever-evolving landscape, and so it's exciting for sure.
Brent, moving on to you then.
No, thanks. I agree with that, everything that Alex has said. And I think, but maybe to add, we're also living in a world where there's change of macroeconomic environments, and what people hold of value or of money changes, and perception changes, and the way that people are willing to interact with technology changes. And sometimes that's because of their view of the world. Sometimes it's because of health crisis or other practicalities that we live in today. And so what I think is happening is that speed of change is starting to occur more rapidly. But there is limitations, legal, regulatory, practical limitations of the worlds that we live in, and finding new technologies of how to fit the old world, but also move to the new world. These are a lot of the challenges that we all face today. And what I'm most excited about is that, and just take this panel as an example, you have different financial services companies working together, collaborating in order to solve those connectivity or those other topics in order to make it a real world, easy to use experience, whether that's digital gold like we're talking about now, or it could be the story I often use is pineapples. You can digitize anything you want, but really at the end of the day, it's what do people hold as value underneath. And I think gold is an important thing to focus on, given the history that and the importance that it has played within our monetary system for centuries.
Thank you, Brent. And David, by no means last, but love to hear your views as well from your perspective. Yeah.
Yeah, no, thanks for having me. And just to sort of echo Alex's sentiment, I actually have a very unique job at MasterCard in that I talk to probably 500 or 600 fintechs a year, and I define fintech as some new type of entity that's being created, with some unique digitally enabled payment scheme. And from our perspective, we're not a bank, and we're certainly not the moral fiber of the system. We are a technology company that's designed to help people move assets safely and securely on a global basis. And so part of the great thing about my job is the ability to see and support new technologies, and we've certainly seen an explosion and support of digital assets, whether it's gold or crypto, or to Brent's point, it could be pineapples for all that we care. Our job is to provide the technology that allows folks to move those assets safely and securely on a global basis, and hopefully for the benefit of consumers. I mean, part of what I look for is folks that add value to the ecosystem, right? Mission-driven companies, and generally speaking, and 98% of the folks that I work with are mission-driven and providing value for consumers and entities, government entities and whatnot along the way. So it's been a pretty fun journey to be involved with.
Great, well, thank you, David. I'm just going to sort of come back to you, actually, the comment that you made in terms of being involved with value-added sort of organizations. Where do you see the value add for digital gold? I mean, what is the case for digital gold in your opinion?
So I think the value add for any digital currency is really provide liquidity and really quick movement and settlement on a global basis, right? And in a cost-effective way, right? Whereas some currencies can be very costly to move on a global basis. So if you're moving money from the US to Africa or the US to Asia, traditionally it's been one, time consuming, two, very expensive, and then liquidity on the nodes can be very, very difficult. And it's kind of predatory in a lot of ways. So the ability to move assets like gold or even crypto or other digital currencies quickly, securely, cost effectively to provide value to folks, I think is something that I've been very supportive of and been really, sort of pleased to see the growth we've seen along the way.
Thank you. And actually moving on to you then, Brent, I mean, understanding the case for digital gold, but also, and perhaps more importantly, the challenges that you've seen and you see generally for the market. And is it possible that digital gold will get more market capitalization? Do you see this being much bigger than what it is today?
Yeah, I do see it growing substantially. I mean, it's been more than 6 years for us already on our journey to get here. And I think it will be several more years before it really gets the huge critical mass. But the first challenge that we set out was velocity and throughput. We chose a technology, a blockchain technology. We used JP Morgan's Quorum, and we sped that up to get the velocity. So we do 1 second block times, and we have 10,000 transactions per second throughput. That's not MasterCard throughput, but for blockchain, that's good throughput. And so we had to solve that first at a technology level. But the second thing that we moved to solve was really something that we're passionate about is I believe that somebody sitting in Central Africa or the Amazon jungle should be on an equal footing to somebody on Wall Street, in the sense that they should have access, they should be a trusted or be able to prove that they can be a trusted person. And so we spent millions of dollars on digitizing identities, on being able to tokenize identities in order to have that trust element there. And in fact, we took one of our digital identity companies called Trust Stamp Public, and we worked with MasterCard on some of those identity tokenizations. And so we spent a lot of time on solving that problem. The next problem that we had to solve was the legal and regulatory. I mean, to give you an idea, it took me 3 years to get a no action letter from the EU that our G-Coin was not a security, that it didn't need a payments license in order to offer it out. It took us 3 years to get a FINMA license in Switzerland. It took us 2.5 years to get money transmission licenses in the US. And so it's we've spent probably $15 million on legal and regulatory compliance work just to get set up, and we've spent the same amount of money on identity in order to make sure people are trusted. So the challenges are substantial, but the amount of investment that's gone in, not just from us, but from quite a few other people in the system, shows that this is going to stay and that we're getting more and more integrated into the real world. And when I say real world, it's traditional ways that people are used to buying and sending of money. And so I think it's here to stay, and I think it's here to grow.
I mean, just on that point then, Brent, there are a number of projects, Goldback tokens out there. Is there room for all of them, or do you think there's going to be like the one ultimate Goldback token?
So let's take the card networks. There's a few card networks around the world that are successful, to have enough critical mass and scale that they can really deliver a service at a cost-effective basis, as Dave talked about. But it's you have to have a certain level of trust, and it is costly to run these systems. So I don't expect there to be 100 successful tokens, but there could be a few. And I think it also really depends on the functionality there. We have 3 functions that we focus on: save, send, and spend. So we have 1 second transaction times on the send part. So you can send anywhere in the world in 1 second. Now, then you can spend linking to cards, at a point of sale similarly quick. And so some people are solving just the save part. Some people are solving the send. Some people are solving the spend. We chose to solve all 3 within the same system. And so it really comes down to functionality of what is a consumer looking for? What do they want? And I think that will determine, which of the tokens or which of the use cases, are solved through digital gold.
Well, thank you, Brent. Moving on to you then, Alex. So what is it that you're solving then by accepting digital gold onto your platforms? And what is the impact that you're seeing on cross-border transfers, if any?
Yeah, there's a few different questions in there, and you know, generally speaking, we have a funny saying here at MoneyGram, which is, you know, money doesn't move, right? Data moves, and money sort of catches up at the end from a settlement perspective. And so, in that aspect, if you go back to one of the original comments that Brent made, the question becomes, you know, what is value to you, and what do you trust? And I think in today's day and age, with tokenization and, you know, the rise of cryptocurrencies as a great example of that, you know, people are beginning to think very differently about, you know, what they invest in, what they trust, and how they view those things. When you look at MoneyGram, you know, the speed of the transaction, the instant settlement that we provide to consumers really provides that bridge between borders and the ability to get money sent and received on both sides. And so, you know, as consumers begin to think about fiat differently and think about tokenized assets, think about cryptos, think about gold as a digitized asset, the question is, how do you participate in that environment? And I think, you know, to Brent's comment, the movement of money, the reason people are sending back and forth for money transfers and remittances generally is for the, you know, to either save or to give money to loved ones in order for them to have a better life. And so, you know, gold has an opportunity to be, in that sense, something very tangible to people that historically I would argue is very intangible. If you wanted to participate in gold, typically people would buy jewelry and then save it in their home. That's an interesting way to do it, but it's not exactly, you know, the most secure longer term. I think if you can tokenize that asset, put it into a digital environment and enable the security that way, you can trade in and out of it, you know, quite easily. And so for MoneyGram, having, you know, rails that go to every country around the world, the ability to move fiat currency in and out, you know, we translate hundreds of currencies interoperably every day. And so to add a digitized asset to that is just an extension of that that same piece. And what's interesting is that, you know, consumers are migrating towards, in our view anyway, cryptocurrencies and digitized assets as, you know, a store of value, a medium of investment to some degree. I have not yet seen a need from a consumer environment to move that into the payments environment. I know that that's a big push for a lot of individuals, and that's something that I think we'll see in the next 5 to 10 years in terms of what I want to do with it. There was a funny article yesterday about Tesla accepting Bitcoin, and the article was interesting. I believe it was out of Forbes or Fortune, and their comment was, why would you take an appreciable asset and buy a depreciable asset with it, right? When you think about fiat currency, you typically don't think about it as appreciating or depreciating. You just think about it as a means of payment. I get paid in US dollars. Therefore, when I buy and sell things, I think about it as how many dollars do I have? When you start getting into the asset world, you tend to compare it back to a fiat. And so you have gold and you have Bitcoin, and you start thinking about what's that value trade and what's that play. And a lot of people have become, I think, much more involved in that as technology has enabled them to see that. And I think tokenization is a bridge. And what MoneyGram can do is not only help you move that cross-border, but participating with companies like G-Coin, we can make it interoperable for you in multiple countries to actually add to your wallet or pull money back out of it so that you can translate it back to fiat, which is how most people measure. So it's pretty exciting. And I think we're really, you know, at the early stages of this. I think there's going to continue to be evolution of it. And to Brent's point, you know, the other comment I would make is that regulation always follows innovation. I think what he had to do to get permissions to move forward is always very difficult. And I think as innovation pushes forward, regulation tends to catch up with that. And so we'll see how it all evolves, and we'll see, you know, where it plays out. But right now, you know, that ability to trade in and out, I think, is a, you know, very interesting competitive advantage for MoneyGram. We're really the first player to enable that sort of interoperability, and for us, it's dynamic and super exciting times.
Thank you, Alex. I know you've just mentioned cryptocurrency, Bitcoin, and, like, you know, just these cryptos being used as payment tools. David, MasterCard is accepting cryptocurrencies, I believe. What's your view, again, Bitcoin and gold, and where MasterCard sort of sits in accepting those?
Yeah, so I mean, to be clear, we do not accept crypto as a monetary tool that goes across our network. to Alex's point, there's nobody's really going to the Gap and buying a pair of blue jeans with Bitcoin. So we support over 80 currencies on our network. We have no problem supporting any currency as long as it's a legitimate regulated currency that people want to utilize. And again, nobody is asking to go into the Gap or to buy a Tesla with Bitcoin just because it's predominantly a speculative tool. Now, that being said, we certainly provide a mechanism for like that sort of journey, if you will, with any digital asset. So you can use a MasterCard to go into a network and purchase digital currency, for example. You can also use a MasterCard for a number of our partners, exchanges and whatnot, to provide liquidity against a digital asset if that's something you want to do. And a variety of our technologies are used in that whole process, whether it's tokenization, the movement and dispersing of funds and whatnot. So think of us right now as playing kind of in the nodes, is money in and money out from a perspective, and then working with those technology providers to build that technology tool set like Brent is building to move those assets safely and securely. So now from our perspective, we're not saying you have to stop there and you can't buy blue jeans with Bitcoin. If that's something that folks need and want to do over time, then we will support those digital currencies on our network. But it's a little premature to think about, of the hundreds, if not thousands, of digital currencies, which ones we support on our network. We're still pretty early in that usage. Mostly what we're seeing is those digital currencies highly volatile and used for speculation. And we're happy to provide tools that serve that marketplace, but it's not a broad-based currency yet. If that happens, central bank digital currencies, stable coins, if we have those currencies, and when those currencies are created, we'll absolutely be able to support them on our network. Now, again, most of our involvement has been kind of in the nodes, but we're working with quite a number of players that are doing really innovative things. For example, we're working with a company that's about to launch a sort of a traditional fiat credit card, but it's going to pay crypto rewards on the back end. Again, really interesting, innovative idea. And we're very supportive of that construct in the market. So to Alex's point, very early, lots of great technology being created. We've still got a ways to go with where we take this whole technology trend.
Thank you. Brent, digital gold, do you think it can ever replace fiat currency? There's clearly still a lot more interest in fiat currency. I don't see, how that's going to change, but of course, love to hear your views on that. And do you think, whether it's 20, 50 years or ever, that digital gold could replace fiat currency?
I think it can, absolutely. But maybe you're talking about the 50 or 60 smaller currencies in the world to start with, right? We're not talking about global domination or anything of that nature. But we don't even have to go there. The number of use cases that I think exist for digital gold are pretty powerful. So think about it this way, and it doesn't replace fiat. So let's say that there's somebody sending money from the US to South America or Africa in a remittance case, and they send a little bit each month. Well, now what you can do is you could send it, load your, bring the cash to MoneyGram, and you can send a G-Coin, and you can build it up over time every month. And now what you've done is you've given the FX decision to the recipient. So if they're in a place like Argentina where it's devaluing substantially, now they're holding value on a month-to-month basis and they're saving. And then what they can do is they can then go make the exchange on their terms, on a single day. And so guess what? They're cashing out then over MoneyGram. So MoneyGram still has the same amount of cash coming in and the same amount of cash going out. But you've given a service, you've given the recipient a decision, a savings tool and a decision-making apparatus of when to do that FX. And then maybe what they can do is they have a lot better quality of life, because now it's like, now I've saved up and I can make a school tuition payment. Or maybe instead, if you're in Nigeria where you don't have a lot of cross-border credit cards, maybe you've given birthday gifts, to one of the kids for a period of time, and now they go buy, the latest, Sony or Razer or one of these games, and they use the MasterCard rails, to go buy that on a digital basis, because they have international connectivity. So, again, it's because now you have this combined savings and spending capability, you've given the customers, the consumers, something of value, and you haven't replaced fiat. You've are still going back to fiat in order to affect the purchase. So nobody's worse off. The other financial services companies aren't worse off. The central banks aren't worse off. The traditional system's not worse off. But guess what? The consumer wins. And so, I think these combined use cases, it needs to be the focus point in the short term, because otherwise, people get, oh, we're trying to change the world. No, we're just trying to add some value to everyday life. And if we do enough of that over the next 10, 20 years, maybe it will have, world impact, changes. But right now, today, we're just trying to do the practical here and now.
Thanks, Brent. Over to you, Alex. So we've had a few questions from the participants about money laundering. And it's a huge risk. Is it unique to digital assets? No, I mean, it's a risk that obviously with fiat currency as well. However, what are you seeing that may be unique when it comes to money laundering sort of risks insofar as crypto or digital gold is concerned, and how are we addressing it?
Yeah, it's definitely compliance in general, whether that's AML or fraud risk or online account takeover. I mean, every form of risk around scams or frauds, AML, money laundering, etc., is on the increase from a risk perspective all around the world. Any company that exists today, any individual is getting pinged and hammered all the time by basically bad guys looking to hack into systems and do whatever damage they can do. I certainly think in today's day and part of the reason that cross-border payments are slow is because governments have a vested interest in ensuring they understand what's coming and going. And so anything related to, KYC, know your customer, anything related to KYP or KYA, know your partner, know your agent, is critical to the ongoing success and the trust in the systems. What's interesting about it is that I would say arguably today, most banking systems, money transfer systems, MoneyGram, do a really, really good job around AML, and for the most part, these risks are minimized to a large extent. Now, that being said, the risk around not knowing who people are tends to be the predominant form of risk and challenge. AML is bad people intentionally entering into a good system. On the other hand, you're a good person, someone trying to do something fraudulent with you is also very prevalent. And so anything that can help standardize that, anything that can help with identification, with ease of risk and concern on that is critically important. And so I would argue that anyone in the financial services industry today is putting an inordinate amount of time, effort, energy, and spend into compliance. You spend astronomical amounts of time with regulators doing reporting back and forth. I think blockchain tokenization has the ability at scale, perhaps over time, to really increase the transparency around all of that. The challenge becomes speed in a real-time payments world, and that's where I think blockchain still needs a ways to go on that. But certainly the transparency of ledger technology, the openness of that, does give us that opportunity to really to change and enhance and provide better services around that for anyone, particularly as we think about a global economy and not just a local domestic economy. Unfortunately, I think we're a long way off from standards around that, because even today, here in the United States, states argue over different state laws and regulations. Local banks, small banks, federal banks all have different requirements, and then that just gets compounded as you move around the world into different markets. So I think to David's point, I think you can begin to bridge these. You can begin to move into the mainstream with these, but it's going to be a slow and evolving process as not only we figure out which tokens, which companies, which currencies, et cetera, are going to be successful, but then also how the regulators are going to respond to those changes, and then how consumers are going to bring them more mainstream into their lives. So I think it's early days, but I do think the more you can think about the stability and the liquidity of the assets that you're entering into, decentralization creates risk, but it also creates transparency at the same time. So they're a little bit juxtaposed, but super interesting, and I think it's going to continue to be a bit of an evolution here as we work our way through what's an extremely new technology, and really bringing that mainstream to consumers is what's so exciting about it.
Thank you, Alex. David, as Alex said, as we try and navigate what to accept or not to accept, is there some sort of checklist that you have in determining what to accept?
So again, I don't make the rules about what currencies we accept on our network. My sense is that's driven by massive demand at a government and consumer level. Short of that, what programs we decide to work with and support, yes, we do quite a bit of due diligence in those types of constructs. We look for we do look for technology that's well built. We look for regulatory compliance. Again, back to Alex's point about fraud. It's not just fraud is really not just unique to digital currencies and Bitcoin or whatever. It runs rampant in entire fintech ecosystem, right? I mean, any type of technology that's being created that sits on the banking infrastructure, like neobanks, for example, they're just tremendous amount of fraud there. And so it's upon us to create tools, compliance tools, fraud tools, tokenization tools that allow these, allow our partners to launch these technologies in a safe way, right? Again, we're not like the regulatory agency that's setting these standards, but we certainly provide tools to allow our customers to manage the risk of fraud, whether it's top of funnel fraud or identity fraud. I mean, I can't tell you, I mean, the minute a neobank launches, they just get bombarded with fraud. Like every possible way that you can imagine, fraudsters come running, they set up accounts, they try anything they can do to either launder money or steal account holders. I mean, it's not unique to digital currencies or digital assets. Just it's pervasive through the system, and it's upon companies like us to build technologies to protect not only our partners, but their customers.
Thank you, David. Brent, the role of sovereigns, and do you think it will have a huge impact on the sort of the status of digital gold, shall we say, if there was a digital backed token issued by a sovereign? Do you think that makes a difference?
I don't think it makes a difference, actually. Sovereigns play an important part of the gold market overall. There's a lot of central banks that hold, gold reserves. Part of the reason, why I don't is because when you set up a network, that network is only as good as those that are on the network, or that network is only as good as to the extent it talks to other networks. So just to set up a token, that's not that hard, but it's not really of use until you get that network effect or the connectivity of networks there. I think that, gold is an interesting thing because it's been the front and center for money laundering, same with crypto, same, with, different things. And so, kind of what both Dave and Alex said is that, I think everybody feels an obligation to get it really right. And, these are unique tools that we have. And, with us sitting at the intersection of the gold industry, the physical gold, and then the, the digital, what we've done is we've taken AI algorithms and we take pictures of kilobars, because that's what we tokenize. We uniquely identify them. We take pictures of faces, we uniquely identify them. And you can compare, you can make sure that that gold hasn't been used for something else. You can make sure that face isn't on the OFAC list or isn't, that, fraud's one thing. You can, your system's not that vulnerable if one person hacks you once, but or tries to get in once, but the real thing is that same person doing it 1,000 times over. By having AI math table hashes and being able to chop it up and identify that kind of stuff, you can tackle all these things. So to the extent that if sovereigns really want to be significant, they should digitize their physical gold using AIs like what we have, and then I think you can really have compliant supply chains, compliant digital chains, and the tools exist today. It's really about network effect, and it's really about how you connect all this stuff.
Brent, I've got a specific question for you actually from a market participant. I'll just read it verbatim. What are the costs of carry for G-Coin? The underlying gold as collateral causes costs which probably decrease my investment in G-Coin in the long run substantially.
So there is a 20 basis point storage and insurance fee embedded into the G-Coin token. We've worked with Brent, G4S, and Loomis in order to store gold at level 1 vaults. To give you an idea, that 20 basis point fee is about half of what GLD charges. And it's a very, very efficient way to own gold, and particularly micro gold. I mean, you can go down to 8 decimal points. And so, that is a balancing act. If you are somebody who maybe lives in a world of dollars or euros or pounds, you might feel it more. But if you're in a world living with pesos and soles and naira and rupees, there's an appreciation usually of gold vis-a-vis, the other, currencies. And so it's something that we try to keep extremely efficient, but nonetheless, that exists, in the physical gold world.
Thank you. So I'm going to start wrapping up then. I've tried to ask the questions from the participants as well. So I'll start with the wrap up, perhaps with you, David, then. And it's going to be the same question for you all. What, I guess, would you like to see happen in this market to perhaps support some of your views? And when I say this market, being sort of the digital space, but also, if you can, specifically within the gold market that you would like to see happen.
So broad-based on digital space, I think that I think we just need to wait for the market to mature. I'm seeing great investment. I'm seeing great technologies being created. I'm still kind of waiting for it to go a little bit mainstream, right? It's still driven predominantly by rich guys and speculation. I'd like to see some of these digital assets become more stabilized and then utilized by the masses to do good, right? Because we have a lot of great opportunity to move money quickly, move money efficiently, safely, securely, and really, in those areas that don't have very strong banking systems that could help a lot of people. So I'd like to see that, and I'm still waiting for the evolution, though I'm working with a lot of great people and companies and ideas and creating good technology. So we're still a little bit early, but I think great things are about to happen in the use of of these digital asset-driven technologies to do a lot of good for folks down the road. Gold specifically, same kind of thing, right? I mean, the types of corridors that Brent and Alex are looking to support are really those that are underserved and underbanked, and they're banking systems that are really volatile. Their consumers don't trust the banking system to be able to provide more stability in those corridors with an asset like gold to serve folks better and to serve them more cost effectively. I think is great, and I'm very supportive and just looking forward to the evolution.
Alex, your views.
Yeah, I think it's I think David made some really excellent points, and maybe to just feed on that a little bit. I think that for me, the exciting part about the tokenization or digitization, if you will, of gold is that it's really taking something that's been, I would argue, to David's point, a little bit intangible for mainstream consumers outside of buying it in its physical form, in the form of jewelry, as an example. And so the ability to really take something that's been for forever viewed as probably the most valuable asset, commodity, whatever you want to call it, in the world, and actually begin to think about it more generally as perhaps a currency or a form of payment, and not just a store of value or something in the form of jewelry, I think is incredibly compelling and very exciting. I mean, everybody in the world is looking for that ability to create stability in their lives and the ability to utilize something that they know that they can count on. And we all invest in the stock market, right? Everyone attempts to invest in anything they think is going to have an appreciable value to them over time. And at the end of the day, when times get tough, people bail on those types of things and they head back to, the old form of trust, which is gold. And so, it's interesting, right? People are jumping into cryptocurrencies. They're completely decentralized and no one knows exactly what they're worth, but there's a perception of value there. I think if you turn that around and say what actually has value, clearly gold has value. And so when you're building a digitized world, and you think about stable coins, and you think about getting out of traditional fiat that has a lot of volatility and creating more stability in the world, I think gold is just absolutely the supreme platform for that. And why not tokenize it? Why not turn it into something more tangible for mainstream consumers? And why not support that push toward financial inclusion through something that's backed by, the most valuable asset arguably in the world for decades and centuries. And I think it's super exciting. And so I would love to see that evolve. I'd love to see standards come out around that. I'd love to see more people jumping into supporting, the ideation and the things that people like Brent are pushing, because again, it's easy to create a token. It's easy to create a crypto. You put the code together, you put out, but what is that really worth and what's the value behind it? And, I think something like gold, it just continues to shine, no pun intended. So anyway, it's exciting, and, I look forward to seeing where it all goes.
Well, Brent, I'm sure comments from David and Alex are music to your ears. So did you want to sort of, I guess, have the last say as to where this is going and what do you think is going to happen within the gold market?
Yeah, so I think that the real opportunity for all of us is to link several of these things together, and they're all related. So what Alex talked about was the utility of gold. Let's make it useful on a day-to-day basis. David talked a lot about liquidity earlier, right? And I think liquidity and utility are closely tied. And what we've done is that we've digitized kilobars. We took a part of the gold market, and we have responsible gold kilobars to be more precise, but the kilobar market is extremely liquid. The e-commerce market is very liquid. The remittance market is very large and liquid. And if we can pull that liquidity together, if we can pull that utility together, I think that's where everybody wins. And I think that's when gold price decouples from the historical way of thinking about it, because now it's about utility, and it's not just about that hedge and kind of the macroeconomic kind of allocation within your portfolio if you're thinking about things on an asset allocation basis. And so that's where it's headed. what I don't think anybody knows is how quickly we get there. Obviously, the more we invest in, compliance and legal and regulatory, the faster we'll get there. But I think the groundwork's been laid, and I think now's kind of the time to start to see some pretty rapid growth.
Great. Well, thank you so much to all of you. I've really enjoyed this discussion. And as always, when it comes to this topic, I've learned a lot from the experts. So thank you, Alex, Brent, and David, for your really insightful comments. Definitely, it's a reoccurring theme when it comes to, well, okay, what next? Time is definitely something that I've heard mentioned over and over again. I was going to say time and time again. Regulation and standards. Again, that has been the sort of the key in understanding what are the standards, how do you sort of, demonstrate compliance with a lot of the regulatory requirements. I mean, Brent, you sort of spoke about your 6-year journey, and it's not going to get any easier. Do we want it to be easier? Will it mean that, there's more sort of risks arising? Who knows? But regulation and standards, definitely. And then that sort of, in terms of the adoption. And how do you sort of support that adoption? How do you create that trust? How do you get the support that you need for these projects if they are going to be helpful and have a positive impact on the real economy? How do you demonstrate that? So definitely something we're going to have to sort of keep a watching eye on. Partly why are we running these webinars is to sort of continue the discussion. Not so much, I don't think any one of us has all the answers, at least today, but it's to raise the awareness, ask those questions, and then maybe revisit those questions in perhaps 12 months, 5 years time, and see if they are being addressed. So we will continue with this series, maybe have you back, maybe in 12 months, if you're still happy to do this, and to see if anything has changed and developed, and if it's been positive development, or if we've perhaps moved backwards. Time will tell, so thank you. Yeah, sorry, Alex, did you want to say something?
Positive.
Yeah, I was going to say, hopefully we don't move backwards. That's all I was going to say.
Yeah,
ever forward.
Absolutely. I think was it you, Brent, who said there's just so much liquidity in various areas. Bringing that together can only be a good thing for everybody. So let's see where we go with that. So David, Brent, and Alex, thank you so much for your time today.
Thanks, guys.
Thank you.
Cheers.
Thank you all. Thank you, Sakhila, for hosting that webinar with David, Brent, and Alex. As mentioned, if you had any questions today, or if you have any questions following this, whether you're watching this pre-recorded later, please do send us an email to ask@lbma.org.uk. We would love to hear from you, and we will forward these across to anybody on the panel today should we receive them. Back to the housekeeping, we do have a few upcoming webinars and slides. So in next week, on the 1st of April, we have the LBMA 2021 price forecast review. So we have Frederick Panazuti from MKS Switzerland, and he's going to host Rona O'Connell from StoneX, Renee Hochreiter from Sieberbrunner Research, and Thorsten Polleit from De Gusse. So we hope that you can join us for that. They're going to take a look at the forecast for 2021, particularly after what we've seen in Q1. And following that, we are handing over the floor to LPPM for their PGMs update, again looking at it after Q1 and moving forward into 2021. So we hope that you can join us for those. You can register for those. All the links are on our website or across any of our social media handles, which is on the next slide. And thank you for joining us today. Have a lovely evening, weekend, day, morning, wherever you are in the world when you're listening to this. And we look forward to seeing you on the next webinar. So thank you and goodbye.